When the RBA decision first hit, the dollar dropped, but then did a screeching U-turn as the statement and press conference were absorbed. And markets adjusted the expectation for next year from one hike to 1.5, which doesn't make it true, but that's what drives the dollar. But the first bit of action on the foreign exchange market today happened at 1:30 this morning, when the Aussie dollar hit an air pocket and sleeping passengers hit their heads on the overhead lockers. And that happened because the US dollar surged, in turn because long-term interest rates, the 10-year bond yield, jumped. But why the herd stampeded at that moment is a bit hard to pinpoint. They might have got a whiff in their nostrils of no US rate cut on Thursday, which is what's expected. Or maybe someone mentioned that long-term rates everywhere are going up, especially in Japan. On a subject related to interest rates, KPMG today released an assessment of what it calls first home buyer accessibility, which means the percentage of homes that first home buyers on average wages can buy. Nationally, it's fallen from 30% to 12% this year. Now, that's shocking enough, but look at WA, South Australia and Queensland, where first home buyers have gone from being able to afford more than half the places on the market to around 20%. In New South Wales, it's stayed the same, at almost none. Tonight, the Aussie dollar is up a lot to 66.5 US cents. The share market fell again, with energy stocks among the biggest falls. That was after a sizable drop in the oil price overnight. And the US market had a rare fall because of that increase in interest rates. And that's finance.